Hello viewers, welcome to my channel. I'm Hasham. So in this video I'm going to start the second part of Introduction Financial Accounting. Already one part I have completed in the previous video where I have explained you about the meaning of accounting, objectives of accounting, functions of accounting, advantages, limitations, differences between bookkeeping, accounting, and who are the users of accounting information. All these things I have explained in the previous video. So if you want the complete grasp of this introduction part, watch the first video. Then you come to this video. Then definitely you can be able to understand. Remember, this is the foundation for the subject financial accounting. Without this, you should not go ahead in doing the other chapters. These are the foundation. So every student must know the basics of financial accounting. So I'm going to explain you in detail. In this video, I'm going to explain you the accounting terms. Some terms are there which are used in accounting. Those terms every student must be acquainted. They should know the meaning, technical meaning of those terms. So I'm going to explain you the accounting terms. Then I'm going to explain you about branches of accounting, basis of accounting, accounting cycle, single entry system and double entry system, and advantages of double entry system. So these are the topics I'm going to cover up in this video. So watch the video till the end. Don't skip in between. So first of all, accounting terms. So what are the different terms which are used in accounting? One by one I'm going to explain you. First one, business. A business is an economic activity which is concerned with producing or distributing of goods and services with the aim of earning profit. So it is a business activity. Business activity is an economic activity which is concerned with producing or distributing goods and services with the aim of earning profit. Second one, business transaction. A business is said to be a bundle of transactions. So many transactions takes place in a business. What do you mean by transaction? Transaction is an activity in which exchange of money or money's worth will take place. An event, an activity where exchange of money or money's worth takes place, that is called a transaction. In a business, so many events, so many activities are there where there is an exchange of money or money's worth. Those are called business transactions. Example are selling the goods, buying the goods, paying the cash, receiving the cash. All these are called business transactions. Next come cash transaction. The transactions can be divided into different types. Cash transaction, a transaction in which the payment is made immediately in cash. A transaction in which the payment is made in cash immediately, that is called cash transaction. Credit transaction, a transaction where the payment is postponed to a future date. Transaction is conducted now, but the amount is not exchanged. The payment will be made on a future date. Example, we sold the goods on credit. We sold the goods. That means transaction took place now. We have sold the goods, but the payment has not been received. The customer has promised to pay after 2 months. It's called credit transaction. If the payment is made immediately, it is called cash transaction. Now, non-cash transaction. There are some transaction which does not involve any cash. Whether payment of cash immediately or postponement of cash. No cash at all. Those type of transactions are called non-cash transaction. Example of non-cash transaction are depreciation, bad debts, etc. Next comes proprietor. The owner of the business is called proprietor. The owner of the business is called proprietor. He invests the money in the business to get a return on his investment, to get some profit on his investment. He is called proprietor. Capital, the amount which is invested, the amount which is invested by the owner in the business is called capital. Capital does not mean that only cash has to be invested. Even if he has invested some assets, that is also called capital. The amount invested by the owner in the business is called capital. Drawings, the value of goods or cash. the value of goods or cash which is withdrawn by the owner for his personal use. Withdrawn by the owner for personal use. Otherwise, goods, the articles, commodities or things in which the business deals. The business deals. That means those articles or commodities which are purchased by the business for the purpose of sale. For the purpose of sale. Example, a furniture business has purchased the furniture for the purpose of selling the furniture. So this furniture is called goods. Similarly, a cloth business. A cloth business has purchased the cloth for the purpose of sale. It is called goods. When the goods are unsold, still it is there. It is not yet sold. It is called stock. Then comes debtor. The person who owes the money to the business. A person who owes the money to the business is called a debtor. Example, we are having a business. We sold the goods to Mr. X on credit. We sold the goods to Mr. X on credit. We have to receive the money from X. So X is a debtor. Then creditor. The party to whom the business owes money. The person to whom the business owes money is called a creditor. Example, we are having a business. We purchased the goods from Mr. X on credit. That means we have not paid the amount. We promised to pay after 2 months. We purchased the goods and payment is not made. We make the payment after 2 months. So Mr. X is a creditor to whom we have to make the payment. Next come assets. The properties or things which are used in the business to run the business activity, those are called assets. Example, machinery, building, furniture, stock, etc. These are the commodities, articles, property which are used by the business, which are used in the business for conducting the business, are called assets. Now liabilities. The amount which the business owes to outsiders. The amount which the business owes to others are called liability. Example, a business has taken a loan from bank. That in future, the business has to repay the loan. That is a liability. Similarly, the creditor. The business has to pay the amount to creditor, suppliers. That's a liability. The amount due, outstanding salary, outstanding rent, outstanding expenses. All these are the amounts which are due by the business to others. That is called a liability. Next comes equity. The claim against the assets of the company. The claim against the assets of a business are called equity. Similarly, equity are of two types. Equity of creditor. Creditor's equity, owner's equity. Creditor's equity means the claim of the creditors on the assets of the business. Owner's equity means the claim of the owners on the assets of the business. That is called equity. Next comes book debts. Book debts means the debts which are recorded in the books. That means the amount which is due from the debtors. The amount which are due from the debtors. Debtors are the parties from whom the business has to get the money. We are having a business. We sold the goods to Mr. X, Mr. Y, Mr. Z. So many people we have sold the goods. The total of all those debts are called book debts. The amount due from debtors are called book debts. Book debts can be classified into good debts and bad debts. Good debts means when the debts are completely recoverable, there is full possibility that we can be able to get the amount. We are sure that we will definitely get the amount from the debtors. Good debts. Then bad debts. When the debts become irrecoverable. For example, we sold goods to Mr. X and 1 lakh rupees is due from Mr. X. Mr. X has become insolvent. Now it is highly impossible to us to get the cash from Mr. X. That is called bad debts. So simply irrecoverable debt. The debt which cannot be recovered is a bad debt. Next, revenue. Revenue means all earnings of the business. That means the cash received, the sale proceeds received, or the money received on providing the service, or interest received, commission received. So whatever the business gets the money, that is called revenue. Expense. The expense are the amount which are paid by the business for getting the benefit. For getting the benefit, The business is paying the amount, that is called expense. Example, salary paid to employees is an expense. Rent paid to the landlord, that is the expense. Similarly, electricity bill paid or water bill paid, gas bill paid, all these are the expenses paid by the business, for which the business will get the benefit. Then losses. Losses means the business has spent the money, but it is not getting any benefit at all. Example, the loss due to fire. The fire occurred and the goods are lost. That is a loss. Bad debts is a loss. Then becomes debit and credit. So to debit means to record the transaction on the debit side of the account. An account will have two sides. Left hand side is called debit side. Right hand side is called credit side. So to debit means writing the transaction on the debit side. To credit means writing the transaction on the credit side of the account. Next comes entry. Entry means recording the transaction in the journal. Recording the transaction in the journal is called entry. Then posting. Posting means the process of transferring the entries from journal to ledger. There are two main books of accounts, journal and ledger. First, entries will be recorded in journal. Periodically, the entries will be transferred from journal to ledger. So this process of transferring the entries from journal to ledger is called posting. Next comes books of accounts. All the books in which systematically accounting is done are called books of accounts. So normally the books of accounts, main books of accounts are two, journal and ledger. Next comes journal. It is called the book of prime entry. Book of original entry, sorry. It's a book of original entry. So whenever a transaction takes place, it is first recorded in this book called journal. Later on, the transaction will be posted from journal to ledger. So these are the accounting terms. I have explained all these things. These are very much necessary. Remember, one or the other time you will come across these concepts in the other chapters. So you must be in a position to remember what is the meaning of those terms. So next topic is branches of accounting. See here, we have accounting, different branches of accounting we have for different objectives, different purposes. The oldest form of accounting was financial accounting. Financial accounting is concerned with recording the transactions in the books of accounts so that we can be able to prepare financial statements. At the end of the year, we can make the profit and loss account, balance sheet. So any accounting kept in order to prepare the financial statements, that is called financial accounting. It is historical accounting. Whatever transactions had occurred during the year, that will be recorded. That is called financial accounting. Second comes cost accounting. It is that branch of accounting which is concerned with recording the cost of production. So a business organization wants to find out what is the cost of production, how much cost incurred to produce the goods, so that we can be able to fix the selling price, so that we can ascertain the cost, so that we can control the cost. So cost ascertainment and cost control, these are the objective of cost accounting. It is focused on ascertaining the cost, controlling the cost. Then third comes management accounting. It is that branch of accounting which is concerned with supplying the necessary information to the management so that management can effectively, efficiently perform its functions. So specialized accounting branch which cater only to management. It will provide information as and when it is required by the management. So these are the three branches of accounting. Now basis of accounting. See here, while matching the revenue with expense, because we can get the profit only after matching the revenue with expense, we can get the profit. During a particular period of time, how much revenue we got, how much expenditure we incurred, by making this matching, we can be able to get the profit. So how to match? We have three bases of accounting. The first basis of accounting, cash basis. It is that basis of accounting where only cash receipt and cash paid will be recorded. That means if any cash is due, it will not be recorded. If cash is not received or cash is not paid, Outstanding amounts not recorded at all. So we record only cash receipt and cash payment. It is called cash basis of accounting. But this type of accounting will have its own flaw because it will not give the correct profitability, because the profitability will change according to receipt of cash and payment of cash. So normally the professional people like lawyers, doctors or non-trade organizations, these people may follow cash basis of accounting. The second is mercantile system or accrual system. This is the most commonly used basis of accounting, which is commonly used. Even Companies Act has prescribed that all the companies must follow mercantile system. So what is mercantile system or accrual system? We record all expenditure and income of the current year, whether received or not, whether paid or not. So we relate the income and expenditure according to the period, according to the year. Suppose in a particular year salary paid 1 lakh rupees and salary due is 20,000. So total salary for the year is 1,20,000, out of which 1 lakh paid, 20,000 due. So while preparing the financial statements, we will take total 1,20,000, whether paid or not, because it relates to the current year. It is called accrual. Similarly, the sale proceed. The sale proceed received is 10 lakh rupees and sales amount not received is 2 lakh rupees. So total sales 12 lakh rupees were there during the current year, out of which 10 lakh rupees received, 2 lakh rupees are due. But while preparing the financial statements, we take complete 12 lakh. Even if it is not received, it will be taken into account because it relates to the current year. Simple words, outstanding and prepaid are adjusted in the current year accounting. That is called accrual system. Mixed basis. One more system is the mixed basis. This is a mixture of cash system and accrual system, in which incomes will be recorded on the basis of cash, whereas expenditure will be recorded on the basis of accrual system. This is called mixed basis. Very few organizations they will follow this mixed basis because it's a very conservative basis. Next comes accounting cycle. Accounting cycle shows the sequence or steps required in performing the accounting function. In accounting function, what are the sequence of steps followed? That is called accounting cycle. And this sequence or steps will be repeated every year. In examination, very frequently you may get a theory question regarding what are the branches of accounting, what are the basis of recording the transaction, and what is accounting cycle. Accounting cycle shows the sequence of activities of accounting which are repeated every year. It is a cycle of activities. The cycle goes on repeating. Right? What are the steps in accounting cycle? The first step is recording. The first step in accounting cycle is recording. Recording the transaction whenever it is taking place. Then secondly, posting to ledger accounts. Periodically, every weekly or every monthly, we transfer all the transactions from journal to ledger. That is called posting. And this journalizing and posting will continue throughout the year. At the end of the year, we make a trial balance. We prepare a trial balance to check the arithmetical accuracy of the books of accounts. If the trial balance tallies, that means there are no errors at all, we go ahead and preparing the financial statements called profit and loss account and balance sheet. So these steps will be repeated every year. Every year we go on recording the transaction, we go on posting the transactions, and at the end of the year we make the trial balance. At the end of the year we make the financial statements. That's it. Next, single entry system. There are two systems of accounting called single entry, double entry. Single entry system is called incomplete system of accounting. Why it is called incomplete? Because only one aspect of the transaction is recorded, the other aspect of the transaction will not be recorded. Every transaction will have two aspects, giving aspect and receiving aspect. When we sell the goods, we are parting away the goods and we are getting the cash. Similarly, when we purchase the goods, we are getting the goods and we are parting away the cash. So every transaction has two aspects. In single entry system, only one aspect will be recorded, the other aspect will not be recorded. It is called incomplete. So in this system, the real account and nominal accounts are not maintained. Only personal account and a cash book is maintained. That's it. Only personal account and cash book. So in this system, we cannot make the trial balance. We cannot make the financial statements. It will be difficult to make. That means there are many disadvantages in this single entry system. Only few organizations, small business concern, a small sole trading concerns, they may follow this single entry system. Now what is a complete system? Double entry system. In double entry system is a bookkeeping system which records both the aspects of the transaction. That's why one account is debited, other account is credited. So every transaction affects two accounts. So one account is debited, the other account is credited. Both the aspects are recorded. It is called double entry system. Example, salary paid. When we pay salary, salary account is debited, cash account is credited. When we sell the goods on cash, cash is debited, sales account is credited. So every transaction, two aspects are there. One account debited, the other account credited. For every debit, there is a corresponding credit. It is called double entry system. It's a complete system of accounting. That's why universally throughout the world, this double entry system will be followed. Double entry system will be followed. Now, what are the advantages of double entry system? Very frequently in examination, a theory question will be asked regarding what are the advantages. The first advantage, complete record as both the aspects are recorded. Single entry system is called incomplete system, whereas double entry system is called complete system. Because we are recording both the aspects, debit aspect and credit aspect. Second, reliable record of all transactions. The transactions are both recorded, so it is more reliable. The accounts are more reliable if we keep the accounts on double entry system. Third one, possible to prepare trial balance and check arithmetical accuracy. No trial balance can be prepared in case of single entry system, because we are recording only one aspect, the other aspect is ignored. Here both the aspects are recorded. So every year we can prepare a trial balance to check the arithmetical accuracy of the books of accounts. If the trial balance tallies, it means arithmetically books of accounts are correct. Similarly, possibility of fraud and misappropriation is minimized. See, when all the transactions are up to date, accurate, reliable, then definitely the possibility of any fraud making by the accountant or making by the employees or misappropriation of goods or funds will get minimized if we keep double entry system. Next one, all the nominal accounts are maintained so that profit and loss account can be prepared to find out the profit. Because in single entry system we are not maintaining nominal accounts, so we cannot prepare profit and loss account, we cannot find out the profit. Whereas in case of double entry system, we are maintaining the nominal accounts, complete nominal accounts. So easily we can prepare the profit and loss account to find out the profit. Lastly, complete information about assets and liabilities are maintained to make the balance sheet. So balance sheet is prepared to find out the financial position of the business. How much the business owns, how much the business owes. To find out that, we need the assets and liabilities. So this double entry system will keep up accurate record, up-to-date record of all assets, liabilities, so we can make the balance sheet on time, we can know the financial position. So these are the advantages of double entry system. So this is the end of this video. In this video, I have explained you the accounting terms which are used, branches of accounting, basis of accounting, accounting cycle, single entry and double entry system, and advantages of double entry system. So if you are satisfied with my lecture, give a like to the video. Give your comments on these lectures and share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Then lastly, don't forget to subscribe my channel. Watch the video with full concentration. It will increase your knowledge. We'll continue this topic in the next video.